Well, JSW Energy is the next stock in focus on the back of their Q1 numbers. Now, a big positive is that their debt reduction continues. Mr. Prashant Jain, the joint MD and CEO of the company, joins us on the show. Hi, Mr. Jain. Thanks so much, sir, for joining in. Well, in Q1, though the top line was steady, the fuel cost partially impacted your margins. Do you expect pressure on account of coal prices to continue to stay for the rest of the year?
So I think we need to look it into the context. Actually, our majority of the portfolio is going to be on the long-term PPA side. It's only affecting only on the merchant side, the fuel prices, and otherwise all other whatever the fuel price increase is passed through for us. And primarily the margins were impacted because of the lower hydro generation this year, and which was a countrywide phenomena, because our generation was lower by 35%, and that is primarily because of the Satluj basin. The water availability was less, but all India basis it was 20% lower. In terms of the fuel prices, I personally feel that they remain elevated, and then for the current quarter also there is a further increase in the prices as well as the further depreciation of rupee. So that's a problem for the imported based plants.
Okay. We understand that Unit 2 of Ratnagiri will be converted to a group captive unit. What's the timeline, the tariff, the ratio of merchant sale to long-term contract sale?
So if you look at Ratnagiri plant, it is 1200 megawatt. Of that, already one unit is with the long-term PPA with the MSEDCL, and there is another 530 megawatt was with the group captive scheme. Now we have added another last unit also into the group captive scheme. And you know that Dolvi for JSW Steel is going for capacity expansion, which will be get completed in next 16 to 18 months time frame. So during 16 to 18 months time frame, entire Ratnagiri will be fully tied up.
Well, Mr. Jain, electricity demand slowed in the first quarter. What are the expectations for the year? Also, if you can give us some tariff guidance for the year.
So in Q1, 4.9% demand growth was there as compared to a similar quarter last year. It was 5.1%, but I reasonably expect that demand growth will continue between 5 to 6%. So it's going to be the trend. And in terms of the merchant tariffs, you saw 4.16 during the Q1, which is on the base of the last year, which was 3 rupees 26 paisa. So I think merchant prices will remain buoyant in the absence of the less coal as well as the higher imported tariff, and then increase in the demand. And so I see merchant tariffs coming down only in a situation when Coal India starts producing more than 650-700 million tons of coal, and then only I see the merchant tariffs coming down. Otherwise they will.
Well, those are GCPL's numbers on your screen. The company has reported a bottom line